Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Tuesday, August 21st, 2018, just getting on to 4:45 p.m. Central Daylight Time. Gold up $5, got a bit of a pop even later in the day as the verdict came in on the Paul Manafort case, and he was found basically in one manner or the other guilty on 8 counts, 10 were not decided, and we saw the guilty plea on Mr. Cohn, who now has said that President Trump knew about the payments and was directing the payments to Ms. Daniels and another woman that he allegedly had an affair with. Either way, while the market was up in the stocks, it gave that up and then some as the market on that news broke back. What does it mean for the metal markets? Well, that's going to be the interesting part. So far, the testimony I'm hearing from experts on different financial TV stations is that the offense that Mr. Manafort's been found guilty of, that doesn't go back to the president in almost any manner. Mr. Cohn's does go back, but it's more of campaign finance violation than him working with Russia, any collusion or that, and that is a blowover deal for him. We'll see how this all plays out, but as you can see, the markets are now clearing the boards. As you look at the weekly chart, we are up for the week, $16 in the gold off the break low close to 1161.40. As you can see on the line that I showed you yesterday, the downtrend line, the market seems to be trying to rally up to that line, and I could see that maybe the market makes a run for it tomorrow on the news that we got late in the day. The rally today peaked out at 1204.30. The last rally high was 1205.80. To break the pattern that we have of bearishness doesn't mean it'll be a bull pattern, and it won't. What you have to do is take that number out. That would give you then a lower low and a high that takes out a previous rally high. In looking at where the 18-day average of closes is, it's dropping each day. It's 1211.80 on the close today. Day before was 1213.70. Day before around 1216.30. So it's dropping about $2.50 a day. And if that holds true, you're probably going to be in the 1209 plus area tomorrow for that number. But to get to it, you have to break 1205.80. So that to me is going to be the important number. As for the Bollinger Band, the market for the moment is at least through staying under it. It has widened out the pattern, and suddenly the Bollinger Bands, instead of dropping the way they were, well, they're starting to try to develop a hook to the bottom and hooking down here to take some of the volatility out of the market. Again, that may not hold tonight when the market after 5 o'clock opens on the news of these two verdicts, one verdict that came in and one guilty plea that came in. Momentum-wise, you've got momentum pointing up, bias down because the market is what? Under the 18-day average, and the trend is still down. When we come to the GLD ETF, you've lost the embedded reading. You can see that right back here. You lost it on Monday. Today, you're getting more follow-through. Again, to break the downtrend, you have to take out 1340, the last rally high in the market. At this point, you still have a pattern of lower highs, lower lows. If it takes that out, I will not be surprised in any manner that prices, in fact, make a run for that 18-day average. I don't even think that matters. I think losing the embedded reading was enough to cause that. And we get to the GDX miners, and you can see you have not lost the embedded reading. You have to close over 20 to do so. So even if it occurs tomorrow, you always have the day after that on the day you lose it, the very next day, if the market gains it back, it's just a bleep in it. You tried losing it back here. We'll see what this does. You know, it's one thing to run for gold because of safe haven ideas on this could all bring the House of Trump in, nothing but problems, but still, how does that affect the miners? And that's the difference. When you come over to the gold-silver ratio, I'm going to repeat again. As long as this stays over the 18-day moving average of closes, I still think it's going to favor gold over silver. And when you look at silver today, you can see what it's done. The market is oversold, trying to work that off. If it takes out the 1483 level, you could end up with a pattern of higher lows and higher highs. You'd still be under the 18-day average, which is up at 1517. Close over that number, you get a different chart pattern. But you haven't done that, and the bears are still in control until 1483 is taken out. In the copper market, and I'm still in the SEP copper and silver only because the volume is still there. Open interest every day is moving into the December because come September 1st, you could take delivery in theory of these markets. But in looking at them, what I see here is still a pattern of a higher high and lower low, a bounce off of ideas that maybe things with China can get better. I've got my doubts on this level of it. We'll see if I'm right or wrong. In the platinum market, a higher high, a lower low. But where the action is the prettiest is what the palladium did. It got back to its 18-day average. It stalled there. It took out its downtrend by doing so. I call this market trendless. The momentum has been pointing up, but when you reopen, you're probably going to be in overbought territory. Any reading over 70 is overbought, and I would imagine the market's going to open steady to higher, and that will create the overbought there. You don't have the buy pattern. What you do have is a couple of layers of resistance at 937, let's call it, to 944, the upper Bollinger Band and the 100-day average of closes. Last, in the dollar index, the dollar's getting hit here as President Trump has talked down the dollar very aggressively, in fact, in numerous interviews that talking it down, it's too high, why does the Fed have to raise U.S. interest rates? And at this time of the year, when the markets are thinner, again, Europe traditionally sees its A-list traders go on vacation in the month of August. If you've ever gone to Europe, and I go, you'll see a lot of the restaurants that you want to go to are closed and so on. You think they're open, but it's a holiday time in parts of Europe. Not all of Europe, but a lot of parts of Europe. And as that happens, you get this thinner volume. Now, this is the first move back under the 18-day average. The trend is still up. You'd have to take out 94.81 to hurt that. Were the verdict and the guilty plea today enough to damage the dollar overnight? Well, we're going to know quickly when the market opens from when I'm recording in about another 15, 20 minutes. I want to obviously bring up to you our offerings. And if you're watching my tapes, you're not watching it for commentary as much as you probably are for the technical indicators. And you can get our 2 volumes of Guide to Technical Indicators, volumes 1 and 2. They're PDFs, and you'll find each one about 20 pages, full color, teaches you what this is about by giving us a call, going to our website, or clicking up here. If you're watching me on YouTube, that'll take you right to the page that you need. I'm Ira Epstein. You have a good day. I'm going to be glued to the TV now as I watch the commentaries on what's going on with these 2 very important trials that came to an end today. Good luck. Good trading to you.